there's a $2.5 trillion gap in global trade finance. That's 2.5 trillion that could be in legitimate transactions on a yearly basis, but isn't, not because there's no demand, but because the current infrastructure is outdated. There is a potentially a solution, and that's blockchain technology. But in order for institutions to utilize this technology, it has to be fast, it has to be accessible, and most of all, it has to be trustworthy. And that's where this conversation comes in today. I'm joined by Billy of XDC Foundation and Ronghui of CertiK, the founder of CertiK, the largest Web3 cybersecurity firm in the space. Billy, I'd like to start this conversation asking you, why trade finance and why now?
Yeah, so, well, trade finance originated on the network because the founders, Atul and Ritesh, had, and specifically Atul really had worked with some banks back in India at the time, and they were working on risk mitigation. And when they were kind of done with that particular project, this was before the launch of XDC Network, they started to look at what is a need within the enterprise space, and it really turned to trade finance. And so they were really looking at, I think from the vision from the very beginning, was really about, you know, how can we help SMEs across the globe have access to the funds that they need. And naturally, the trade finance gap, I mean, there's trillions of dollars that are happening annually within trade finance, but there's trillions of dollars clearly that are a gap and are not happening, and that's what they really decided they wanted to solve.
Ronghui, do you think is it more of a security problem? Why is that gap so large, in your humble opinion?
Oh yeah, I would say that security is definitely one of the important factor for that gap, but may not be the only one. So as you mentioned, right, like, well, it's about accessibility, right? It's about whether the underlying infrastructure is, let's say, efficient enough. But I would say cybersecurity is indeed a reason that scare away many of the institutions, right? Or make them hesitate, right, to embrace this technology right now, right? I would say that, first of all, so many hacks, right, happen every day, right? Like yesterday we post a tweet like in April there are just only 3 days without a hack event in the industry and so on. So this is I would say first thing. Second is that cybersecurity is part of it's one of the risks, but there are also other risks like compliance risk, right? Like on-chain risk, off-chain risk, and so on. So I would say kind of like is still at early stage, but we have there's a lot of challenges ahead of us that we need to address to indeed empower, I would say, the full adoption from institutions and so on. Yeah.
You obviously live and breathe security, but Billy, for you, you're approaching this more from an innovation perspective. So when you're having conversations with folks, what kind of challenges are you seeing from their perspective?
Well, I think always the first thing is, how do you go from what is traditional to or off-chain to what is, or can you do on-chain? And I think that as easy as we talk about what, the things that you can do in blockchain, there are still challenges or points of friction that happen for somebody who lives in the off-chain world to be able to figure out, well, first I have to go from fiat into a digital stable, and then from there, I have to put it in a wallet, I have to maybe move it to another wallet, I have to do all these transactions. And I do really believe that at the heart of all of that, it then becomes this thought of, well, the more times I'm moving it, the more risk there is. And I do think if you talk to institutions who are really like wedded in trade or traditional finance, whether they're traditional custodians or other traditional types of banks, if they're holding cryptocurrencies, they have such secure vaulting that to be able to move it from there has to be a pretty risky proposition. And I think that's the way people view it. There's just when does that risk of doing something on chain outweigh the reward? And I think that's the problem that ultimately needs to be solved. But I will say, there's been tremendous, from the trustworthiness perspective, there's been tremendous work done on securing networks, what you're doing from an audit perspective, the fact that it's a standard, and there's also other ways in which people are looking at trustworthiness, which is, what is it that I am buying if there's a tokenized asset, and is there something from the source, and can I trace it to the source? And so there's been a lot of really great work that's been done, and I think there's still a lot more that has to happen.
Yeah, and that's a good follow-up question to you, Ronghui, about tokenized assets. I mean, how do you trace it back to the real asset?
Yeah, well, it's a great question. So I would say right now the most successful tokenized asset is stablecoin, right? And for stablecoin, you can see, well, there are compliance framework right now, and but I would say there are still some effort trying to push for something what we call real-time proof of reserve. Right, real-time proof of reserve. Right now, let's say there's a company. First of all, you need to trust the company, right? Second, they report this like the backed asset, right, in the in some periods, right, and work with some external auditing firm, right, financial accounting firm, and so on it. But this is just for stablecoin. But for more a broader class of let's say RWA and so on, we may need, let's say, real-time proof reserve, right? And also, as you mentioned, how we can make sure that this indeed connect with underlying assets. So this we need to have, I would say, have new solution. Also, we need to kind of like work with more, let's say, regulators about, let's say, if something bad happen, right? How can we protect the retail user and so on? These are still unclear at the moment. We need to work with, let's say, partners like XDC and so on to figure it out. Yeah.
And to your point, these are ongoing questions. But Billy, I want to go back to something that you mentioned earlier about, from a user experience, having to go and switch wallets or make a certain transaction. You're having to do 4 or 5 different steps. Is AI the solution to that?
Well, I mean, I think the advent of AI agents and what's going on within that space allows for a lot of things to happen that were not happening before. And I think that depending on the corporation or the enterprise that's looking to do something, I mean, they can invest in it how they see fit, and obviously that's happening significantly, across industries. So I definitely think that there's something in there for that. I don't know what the ultimate solution is for it, other than the fact that we all know that the outcome has to be, when you open up your phone, it has to be as easy as really what you're doing with, say, like an Apple Pay or something like that, where you can walk in anywhere and you just pay for it. And on the backside of it, nothing's any different. You want to see your balances, you go to a website. It's very simple and it's easy. And I think the benefit of blockchain is that it can be immediate and have finality in transaction. So as a basis for that, when you're bringing kind of those Web 2 interfaces to Web 3, I think that's one of the real values from the financial side. But that helps people maybe not double spend and some things that people have talked about in crypto for a long time, but it doesn't actually necessarily make it easier on their part. That's the interface.
Sure.
And, so yeah, I mean, AI agents can go from here to here to here if it's set up properly, right? And so maybe it takes those steps and makes them super easy and quick.
That seems to be one of the narratives in crypto as a whole, that it can just streamline the process. Yeah. And so, Ronghui, for question for you, does this type of seamless transition, does it create more opportunities for vulnerabilities, or are there any risks associated with these AI agents?
Oh yeah, so first of all, I would say the development of AI indeed introduced lots of new threats, right, to crypto industry. So as I mentioned, right, April may be one of our most busy months, right? Only 3 days with our hacking events. Although there's no strict evidence showing that, well, this is cost or related to AI development, but we have seen some evidence well, it's highly related. And with the development of AI and so on, so I would say but right now the hacker's life can be easier, and but for CertiK as a security firm, right, our job become more and more challenging, and also we need to catch up the trends. So you talk about this new interface and so on. So I think in the past few years we work closely with a partner to make the smart contracts itself more and more secure. Right, so we have seen that the hacks related to smart contract vulnerability has been dropped. But right now, due to this, we want to create a better interface, right? Like users, they do not want to directly interact with smart contract and so on, right? So we want to have a Web2 like user experience. Well, this chain will introduce definitely more attack vector. That's for sure. And it's still at the very early stage, right? I would say to educate the industry to pay more attention, to allocate more resources to secure beyond the smart contract, right? To secure, let's say, the application, right? To let's say secure the operation, right? And so on. So this part, I would say, is more urgent from my point of view at this moment.
And so while we're on the topic of AI, I do want to follow up with, how is AI impacting the cybersecurity side of the things?
Yeah, well, so first of all, I would say the AI model right now can already find very, I would say, meaningful vulnerabilities. And from our current evaluation, it can work as good as, I would say, junior auditor or junior security researcher. So big advance compared with maybe 2 years ago. When hacker utilize AI, right, they do not worry too much about the cost, right? Like they want to target a project or want to target, let's say, an exchange. They can simply spend lots of tokens, right? Try to do the attack. But for let's say, but as a cybersecurity firm, right, it's hard, right? It's kind of like we have some budget, right? We work with, let's say, a number of clients, right? And we work just in scope. So that makes this wall a little bit unfair, right? So we try to kind of like, so that's why we release our AI auditor. We try to release some cost-effective solution that can integrate that solution into the development cycle, right? Rather than wait until, let's say, a big release, right, and a big epoch audit and so on. We try to utilize this approach to fight against, kind of like the new risk introduced by AI.
Thanks for that breakdown. I do want to get back to the conversation around trade finance because trade finance seems to be a very general topic. But your boots on the ground, Billy. You're talking to a lot of teams. They're thinking about things a little bit differently than most are. So, what are some of the use cases that you're seeing from a trade finance perspective? I know accounts receivable is most likely part of that process, but I'd love to hear from you. What are some of the great use cases that you're seeing?
So, I really, when we look at it, and I think trade finance is really, in many ways, it's just really about somebody has a shipment and they've got an invoice and they want to send it somewhere, and so, and I guess the thing of, you probably have 40 different pieces of paper in making that transaction. So getting that on chain and doing all of these things, there are risks. There's risks, obviously, to being on paper, but I think it's a hard pull to say, okay, well, it's a complicated system, let's just make it happen. And I think along the way, while we've been doing this and it's been building, the idea of just real world assets and tokenization has grown just in general, and access and ability to be able to launch tokens has grown tremendously across the network. So now we see opportunities where tokenization isn't just about taking an asset and putting it on a network, but it's also really about what can a business maybe do with their debt? Can they restructure it? Do they have cash flows? And by bringing that on chain and creating a vault and offering it to people who kind of fit the profile of what they're looking for to help businesses like that and where they want to put their money, then you're creating sustainable yields that are building and supporting real businesses. But it may actually be more generated towards working capital than maybe specifically, here's an invoice, let me just get that paid for so I can deliver it. So we're starting to see the evolution of what's really happening in the space, and I think a lot of our focus has really been, we're not really just here to tokenize. We want to, because it's been proven you can tokenize, but we want to actually add real value to industries and markets, and so that's really been our focus. How can we actually do that?
And so is tokenizing more about the liquidity aspect of it, or what's like the real advantage there going through that tokenization?
Well, it depends on, I think, what side of the equation you're looking at, because you have the issuers and then you have the liquidity providers. And so if you're looking at industries that typically, securitization industries for off-chain trade finance, where you're doing a lot of transactions and you're turning dollars over on a very short cycle, 45, 47, 60 days, something like that, from a traditional invoice, then you're looking at how can you actually streamline the process, how can you actually have everything digitized so that you can see it on chain and no documents are ever lost when in that process. But I think the big thing on that side really is somebody's not taking a bill of lading and going to 5 different people and saying, can you give me money? And 5 different people giving them money, because only one person actually has that product secured. So when you're on a network and you have a platform that can do that, you can see that there's one person that has actually lent money towards that invoice, and you're going to actually save a lot in the way of fraud. And you want to talk about the trade finance gap. If you have multiple people who are lending money, giving money to somebody for an invoice, it's not a very good system in terms of efficiency. So I think that's one way in which we're seeing things that have like real potential. But I also think there's opportunities to kind of change the way invoice factoring happens, in that it can become more efficient on secondary markets. So, those people that maybe if they're stuck with an invoice that's not really performing, they have, better outlets to be able to, manage those assets. And if you have it on chain and it's immediate and people can see these marketplaces and participate in them, then I think, there's opportunities for that. And so, those are the kinds of things I think, people are trying to do.
Transparency, faster, cheaper, seems like a lot of benefits in implementing this system. I wanted to pivot about the, I don't know if we call it partnership, but the collaboration. You're obviously building this infrastructure, and Ronghui, you're securing it so that way more institutions can use this. Walk me through the process of, what made you decide to work with CertiK? How has that experience been on your end?
Yeah, well, overall, it's been great, and it's been years at this point. I'm trying to think the first time we had really realized that, okay, and we need to get out and find somebody to audit a particular contract or what we were doing. It's been so long I can't even remember what it actually was about at the time, but yeah, we ended up working together on it, and I think since that time, what's really kind of happened is that it's not just a matter of what's happening on the network level, but we have a lot of different projects that are coming onto the network, and they're looking to do things, and we're working with other people to help bring these projects here. We were talking about this earlier. We're doing work with Plug and Play in Silicon Valley. We have an accelerator going on, and we have a number of projects that are coming through there that need to have audits, and they're building something on the network, and so I think that's just a natural progression. We have kind of these partnerships that we kind of try to build with people that we want to work with over a long period of time, and you build confidence, and then the opportunity is to kind of expand within that network.
Yeah, no, it's been a real pleasure working together. Ronghui, what about from your end? How's it been working with XDC?
Yeah, I would say it's definitely a great experience because so I would say this let's say tokenization institution, actually they are still very new concept and a new technical stack, and working with pioneering project like XDC also help us to improve our cybersecurity technology, right? To improve our internal solution, right? To see if it can match the what we call institutional grade cybersecurity, right? And so on. So well, I would say it's great pleasure for us to working with XDC, and we learn a lot from this procedure as well, and hope that we can work together in the future and help secure not only the XDC network but also the entire ecosystem.
Yeah, thanks so much for your collaboration. It's a real pleasure, and enjoy learning a lot from you in terms of what you're seeing boots on the ground. And Ronghui, thanks so much for adding your insights to this conversation from the security perspective.
Okay.
That's all from us. Thank you all for joining.